welcome to our Red Cloud webinar featuring NexGold Mining Corp, a TSXV listed gold developer with advanced projects in Canada. The company has the 3 million ounce Goldboro project in Nova Scotia, along with the 3.5 million ounce Goliath project in northwestern Ontario. We're pleased to have with us today the president and CEO, Kevin Bullock, to give us an update on the progress that the company is making at both these exciting assets. NexGold has had a busy year and has a catalyst-rich future in front of it. We're anticipating seeing an updated MRE and feasibility study at the Goldboro project shortly. And at Goliath, they're advancing that through a feasibility study and are working their way through the environmental permitting process as we speak. With the recent successful completion of financings, the company is in a very good position to make a construction decision and advance to become one of Canada's next mid-tier gold producers. My name is Ron Stewart, and I'm a research analyst here at Red Cloud, and I'll be your host for this afternoon's webinar. We invite you to ask questions at any time during the presentation. You can do that by simply typing them in the box on the side of the screen, and we'll get to them, as many of them as we can, at the end of the presentation. During today's webinar, the company will make some forward-looking statements. We direct you to their website at www.nexgold.com and review the disclaimer and disclosure sheet on their presentation on page 2. I'd also like to point out that the presentation that we're giving today is for information purposes only and is not a solicitation to either buy or sell securities. Participants should consult their own financial advice and do their own research ahead of making any kind of investment decision. Finally, if you're interested, you can find our website, our research on NexGold on our website at www.redcloudsecurities.com. We ask that you look at our disclaimers and disclosure part of that as well before making any decisions. With that, I'm going to pass the call over to Kevin to give us the update on NexGold. Kevin, over to you.
Thanks very much, Ron, and welcome everybody. I really appreciate the opportunity to be here and tell the story about NexGold, which we believe will be the next gold developer in Canada. I will be, as Ron said, saying some forward-looking statements. Please read our note on cautionary statements on our website. The company was formed through a couple of transactions whereby the Black Wolf was acquired by Treasury Metals to form NexGold in 2024. And within 3 or 4 months after that, that NexGold company was then acquired Signal Gold for what we have as today as the new NexGold. And that kind of came out of the gate in January of this year. So there's been a lot accomplished in about 10 months. It combined multiple Canadian gold projects into one portfolio, and that kind of creates the strategy of being a focused mid-tier next gold producer with a series of assets in a pipeline where we'll build one after the other to become the next mid-tier mining company. We have quite a team in place with the combination of the 3 companies together to execute on permitting, financing, construction, and operations. And we just received our Fisheries Act Authorization, which was the final major federal permit required for the project to move forward. And we have all of our provincial permits in hand as well. So we are a fully permitted company at the moment at our Goldboro project in Nova Scotia. We've recently completed a royalty financing with Appian that deleverages the balance sheet. We were able to pay off the existing loans and royalties in the company and have about $10 million left over. That royalty is a 2.9% royalty on Goldboro, of which we can buy back 1.9%. So not a bad opportunity at all. We then that royalty financing came with a letter of intent from Appian for $175 million US project finance. With those two transactions in hand, we got a lot of interest in the project moving forward, to the point that we were able to do a $100 million hard dollar equity raise and a $12.5 million flow-through round to keep the exploration going and move forward on detailed engineering and initial long lead items and work that needs to be done to start construction next year. So significant valuation re-rate potential is there in this final permitting and construction decision. The management and board, myself, I'm a registered professional mining engineer in the provinces of Ontario and Nova Scotia. I'm on the board of B2 Gold because of my history with things like helping start Kirkland Lake Gold, IM Gold, and Volta Resources, which was purchased by B2 Gold about 13 years ago, that had drilled off the Kiaka gold deposit in Burkina Faso, which is now in production. Oren Baranowski, our CFO, has been around for over 25 years and has raised over $1 billion in financing for projects in Canada. Our recent hire, Brian Jackson, who's VP of Projects, Brian has been very successful in on-time and on-budget projects, some much larger than Goldboro, and we're happy to have him on board to build the owners team to move forward with the build. Paul McNeil, our VP of Exploration, has been over 20 years in the business, mostly in the East Coast, in exploration from grassroots right up to mineral resource handovers to the construction team. Deidre Puddester, our VP of Sustainability. I can't say enough about Deidre. She managed to get social licenses as well as all the permits, community relationships over the last 7 years to put us in the position we're in. Amanda Abale, former human resources manager at other large companies, now our VP of Human Resources, and Amanda's been with us for about 7 years, and she'll be instrumental in getting the appropriate personnel ready for the build in Nova Scotia. Our chairman, a very well-known name, Jim Gowans, used to be CEO of Placer Dome, Barrick, and various other large entities. Andy Bowering and Rob McLeod, two of the Black Wolf or Strategic Fiore Group appointees. Morgan Lekstrom as well. Paul McRae, who was a right-hand technical person for the Lundin Group. Mary Lynn Oak, who used to be VP Finance of Hudbay. So a very well-rounded board. And strategic advisors, it's important to have sponsorship in today's markets. So Frank Giustra and his vision of building this next mid-tier company by building smaller 100,000 ounce a year projects one after the other holds a significant position within the company and is a strategic advisor, as well as Sean Kunkun, who is also with the Fiore Group. Our capital structure, we have 240 million shares issued and outstanding. We did have a warrant with our most recent $100 million financing, so there's 107 million warrants out. About 40 million of those are going to come due over the next 6 to 18 months, so during the production period. And there's about $40 to $45 million of in-the-money warrants right now, in addition to the cash of over 100 million that we have. So fully diluted, 354 million. Our current market cap is about 340 million, with a share price around $1.40. We do have quite a heavy liquidity at over 2 million shares traded every day. The analyst coverage that we have, Ron with Red Cloud, who introduced us. We have Paradigm Capital, National Bank Financial, and Cormark Securities. As can be seen on the capital structure, Frank Giustra owns about 5%. NexGold Management and Board of Directors own 2%. We have purchased all our shares in the market or on financings. None of this is founder shares. We buy in the market alongside our shareholders, so we're aligned that way. And we built it up to about a 61% institutional ownership on top of that as well with this new financing that we've carried out. So quite a healthy share registry. So Goliath and Goldboro are the two starting projects that will become part of a pipeline of projects, with Goldboro to go first and then Goliath to be built after that. They're very similar in value. The latest technical reports that were done for each of them amounted to the same kind of annual production, low quartile operating costs, 25% IRR. These were done at approximately $2,500 ago in the gold price. So it's going to be quite interesting to see what updated technical reports will look like. The Goldboro project is in Nova Scotia, in the northeast. So it's on the shore, on the southern shore, in the northeast of the province, in an area called Goldboro because of its history of gold mining back in the late 1800s, early 1900s. It's a 285 square kilometer land package, quite large, approximately 175 kilometers northeast of Halifax. We received our provincial environmental assessment approval back in 2022, and then, but in the last year or so, we've received all the other permits, and that's what I think is the silver lining of a Trump administration in getting us in Canada and other countries to get going and developing their own resources. We signed a historic benefits agreement late last year with the Assembly of Nova Scotia Mi'kmaq Chiefs. Very important to have a First Nations agreement in hand. We also have a mutual benefits agreement with the municipality of the District of Guysborough, which is where the project is located as well. Large exploration potential around what's already a 3 million ounce resource with 1.1 million ounces of reserve. The feasibility study that, again, I'll remind you, was done at $1,600 gold in 2022 showed a payback of 3 years, low operating costs, 100,000 ounces a year production, and an NPV of $330 million. At today's price of gold, that would be over $1 billion, and a similar economic result shows for our other project in Ontario too, being the Goliath Gold Complex. The exploration potential beyond what's already been found to the west of the current resource, we've seen that the zone continues, and we're hitting the same types of intersections to the west as we hit in the pit itself. This is just a different area of land that we didn't control earlier on, and therefore we're drilling it now. But it looks like the zone of mineralization doesn't care where different land ownership is when it was formed. It continues to the west, so we're happy to be drilling that and drill it off further in the coming months to add to the project reserve as we go forward. The deposit itself is a series of anticlinal structures, which are in the hot colors on this particular diagram. This anticline folded structure stacked system has over 80 units of these hot colors that you see. And they average between 6 and 7 grams per ton and have disseminated mineralization around them. So the open pit potential is mining the noses of these anticlinal systems and the limbs, as well as the disseminated mineralization and the other lower grade mineralization around them in an open pit. And that's today's current project with a capital P. However, there's a lot of opportunity at depth and on strike, as I showed on the previous slide. There's another 1.7 million ounces at depth, a lot of which is still inferred, averaging 6 to 7 grams per ton. So we see a future of underground mining here. Later, as we go through the open pit phase, we'll be drilling off the underground as well. At the Goliath Gold Complex, Similar type of deposit, 3 million ounces, over 3 million ounces of resource, over a million ounce reserve, world-class infrastructure. This is on the Trans-Canada Highway with rail and power and highways running through it. We've already received the environmental assessment federally in 2019, and a lot of exploration potential in the Goliath Gold Complex. We are still working on permits for this project, as well as the IBAs for the agreements with the First Nations. It's a 65-kilometer, almost from the Goliath deposit in and around Dryden, almost all the way up to the Sioux Lookout, with a secondary highway running through it, which makes for easy exploration on this particular project. It is a large project with 3 known deposits to date. We are currently drilling now at the Gold Lund deposit to infill drill and de-risk that resource. And there's a lot of opportunity with targets throughout the project boundary. Again, this is the last technical report done for Goliath, and that was at 1,750 gold, so still quite a ways away from where we are now, showing low costs, a 330 million NPV. Again, this particular project would be over $1 billion in today's price of gold. So quite an enormous jump from when this report was done. So in looking at what I've said to this point, we certainly have an increase in the gold price from when we did our resources back in 22, 23 and our technical studies, and there's been significant inflation. But the production margin between the increase in price of gold and increase in costs has grown as well. So we're definitely looking at a higher delta for our projects as we move forward at this point in time. So I thought that was quite interesting to note as we embark on doing an updated feasibility study for Goldboro, and we look at our opportunities for optimization at Goliath. Compared to our peers, we've had a re-rating by getting our provincial permits and doing some of our transactions, but we're still only 0.2 times NAV. So we plan to be moving left on this scale as we move closer to production and further drilling and further positive statements about being shovel ready. So really what I wanted to hope that people take away from here is that, the unified strengths of putting these 3 companies together with a market cap of over 300 million, kind of reflects the scale and the enhanced capabilities. We have an experienced development and operating team to execute on this strategy. And we certainly have the most advanced projects, some of the most advanced projects in Canada, which is a great jurisdiction in these days and times to move forward on. Partially permitted projects, meaning one of them's permitted, the other one's working its way through it. Strong relationships with the First Nations in both areas, Ontario and Nova Scotia, but IBA signed in Nova Scotia, and all the permits received in Canada. This is a rare thing that takes quite a long time to do. In our case, 7 years in Nova Scotia, but most of it happened in the last year. Very strong financial position. We're debt-free as a result of the royalty financing we did, which leveraged the balance sheet. We completed $112 million financing, of which $100 million was hard dollars and 12.5 flow through. We have a letter of intent that we're working on bringing to a fully binding document for $175 million US with Appian. So we've got a clear financing path forward in a great jurisdiction with a high-grade mine on the east coast of Canada. We're leveraging the complementary assets and expertise and synergies with this management that we have now combined. We've got a robust market presence because of this multi-asset infrastructure. Our trading liquidity is enhanced tremendously. We're up to, as I said, over 2 million shares a day from as individual companies a year ago, 30,000 to 100,000 shares a day. Our commitment to sustainability and innovation is second to none. That's why I think we got through our processes for permitting and for community relations and First Nations relations as we talk through how we're going to operate in these areas and give back to the communities. And a great strategic exploration initiative. We're looking at regional targets as well as extensional targets in both Goldboro and Goliath, which has a lot of opportunity included in it. So that's my presentation. I would like to leave time for questions and or comments. And I just think that it's the first time that I've been involved in something where everything is aligned. You have a willing government, you have willing First Nations, you have a willing market, you have an all-time high gold price, all lined up. And I've waited 40 years for this to happen, and glad to be in it at the moment.
Kevin, really good job. Thank you for the summary. I'll just remind all of our listeners, if you have a question, go to the comments section on the right side of your screen and type it in. We've got a couple. They're really themed on giving us some sort of indication of what 26 is really going to look like, and at what point do you believe you'll be in a position to make a construction decision and put a shovel in the ground?
So some of the conditions precedent for the project financing is what I've mentioned. We have to finish an updated feasibility study at Goldboro. That we feel will get done by the second quarter of next year. That's going to be we're currently doing our new resource based on 25,000 meters of infill for de-risking the actual mineral resource at Goldboro. That's going to feed into the updated feasibility study. So we believe that we will make a final investment decision around the second quarter and start building mid next year, and then it's a 2-year build. So what we've got to look forward to is the new updated feasibility study, signing of the project finance, and moving forward with the final investment decision there. While we build Goldboro, we've had two projects that have been competing against each other, and we've been rushing through trying to get one of them to get into construction and get some revenues going in this market. And Goldboro has pulled ahead to be that project. Now that we have time, we will never build two projects at once. Now that we have time, and Goldboro is going to be built over a 2-year period, say 2.5 years from now, it'll be finalized. We have that time to fully optimize the Goliath project. So we're looking at opportunities right now whereby we're looking at the infrastructure footprint of Goliath, which what's best for the project might be to move that around a bit. And we're looking at opportunities for the tailings facility as well. So as we go through those internal studies, we'll set ourselves up to finalize the feasibility study after we've chosen the route to take on optimizing that project. So that's and we're drilling right now, doing infill drilling at Goldland, one of the open pits at the Goliath Gold Complex. So that's what's going to happen over the next little while. We'll be constructing one and finalizing permitting and into feasibility in the other.
So really, that was one of the other themes in the questions was which project would come first and what would happen with the project that is the Goliath project that looks like it's going to be the second one. So you answered that in the context of that. I appreciate that. I'm just curious, though, Kevin, maybe you can talk a little bit about where Niblack fits into the overall plan.
So Niblack is a polymetallic deposit in Alaska. It's got quite a high grade resource containing zinc and copper and silver and gold, but it's a concentrate producer, and it's not core to where we want to be moving forward, building these multiple gold assets and pouring gold doré at the end of the day at those. So we want to transact on Niblack to the benefit of the other projects. In other words, transact with a group that's willing to hopefully pay some cash and possibly shares, but something that creates value that we can use towards our other projects.
We've got a question here on back on Goliath. Has the Ontario government fast track policy impacted your timeline on getting Goliath moved forward through the permitting phase?
Not yet, and we don't think it'll. It's great that the federal government and the provincial government of Ontario want development, but the fast track process, the 1P1P process, is for provincial permits, whereas we're a federal permit being over 5,000 tons a day. So we have to work through the federal permit process.
I understand.
I think there'll be things that help us as we go, because as they synchronize and get aligned. But the 1P1P really is for projects that are provincially permitted.
Okay. One of our listeners, Bruce, is really curious to hear a little bit more about the infrastructure requirements to advance Goldboro. Can you speak to that a little bit?
Yeah, so Goldboro is quite unique. Goldboro is there's access by Quality Road right to the site, because it was a past producer, and it was also opened up for exploration with a ramp back in the 90s. So access to it is very good. There's a power line right to the area, but it needs to be upgraded. So we're working with Nova Scotia Hydro on that for power. The challenge with Goldboro is that there's 66 people, I think, is the population. So we need close to 400 to start building. So therefore, we need to build an employee housing facility and a 4,000 ton per day process plant and a fully lined storage facility, along with the other infrastructure of truck shops and office buildings, etc. So the main components are the process plant, the employee housing facility, and the tailings facility.
All right. David's asking if you could give us an update on the drilling on the Stewart trend at Goldboro. When might we see some results from that work?
So the Stewart target that we're looking at, that's a regional exploration play whereby we've gone and done some sampling, some geophysics, and come up with a target that's a little different than Goldboro. So we're testing it with a few holes. I would assume that the results would come in the next couple of months from that. We constantly do checking of regional targets with exploration drilling to the order of 500 to 2,000 meters at these targets, while we're doing all the other things as looking for additional buildup of drilling targets.
Another question's come in is when would we expect, and it says RE, so I'm going to assume that it's the mineral resource estimate. When do we expect to see the mineral resource estimate at Goldboro?
Well, because we're finalizing one to put into the updated feasibility study that's due in the second quarter of next year, to do two full 43-101 reports that'll only be a couple of months away, we'll probably just announce it all in the updated feasibility study.
Right. No, I understand. Another question is, can you give us an indication of your projected mine life for Goldboro?
Yeah, so Goldboro, the project with a capital P, the way it's defined today for permitting and for our work moving forward, is the open pit portion of the deposit. So two open pits straddling a river that has about a 13-year mine life and 100,000 ounces a year is that project. However, as I showed in my slides, there's extensions to the west for more open pit mining, and then there's the underground. So I truly believe with further drilling and further updates that this will be a multi-generational project, and there isn't a good use of funds for a company like us to be drilling very deep holes right now, defining the underground, when we could do it off of exploration drifts off the open pit. and design an underground based on knowledge of something in 3D rather than small drill holes as well, is ideal for us to go into a phase 2 amended permit for that. The extension to the west, that's something we're working on that could even change throughput, because it's either another pit or extension of the west pit, whereby we could use larger equipment. So that is another phase of permitting where we would want to either increase throughput or add to the mine life. But all in all, when you put those three things together, the western extension, the underground, and the current open pits, got a mine life that goes way beyond the 13 years.
So I appreciate that, Kevin, and that was something that I had noted in your presentation, the discussion about the underground. But when you start looking at something that is post year 13 from today's value point of view, you don't want to spend a whole lot of money on years 14 to 20, even though you may know they're there. But the idea that you could have an underground at the end of this, moving into that as you move forward is really quite encouraging. The work that I've seen you do off the ends of the pits would suggest to me that what you've got right now are current design pits. They are not going to be the ultimate pits on the project. So I think it's all very exciting in that respect. Can you talk to us a little bit about the recoveries at Goldboro? I would expect that you're going to get a reasonable amount of gravity recovery, which would be relatively low cost operating costs. No?
Well, one of the benefits that we have is that the project in somebody else's hands was opened up with a ramp. I guess it was during the flow through days when you could use flow through for ramping and exploration. We actually pumped that out, went down, deepened it, and put in another level, and actually did a couple of test stopes underground within the heart of the deposit of where the pit will be. And we shipped that to our mill. We did have an operating mine in Newfoundland for 10 years, up until about 4 or 5 years ago. We shipped that over, and we were able to process it through our mill with a gravity concentrator in there. We ended up getting 55% out by gravity in that 10,000 ton bulk sample. And the overall recovery allowed us to form a recovery curve, which shows us that at the average grade we predict going through our mill, we'll get about 95% recovery. And I think it would be a push to say we'll get 55% gravity, because obviously this was a test run, being very, very careful. I think in a normal throughput mine, it's going to be around the 40% mark in gravity, which, as you say, is cheaper because it limits the amount of cyanide that you have to use on the rest of the process.
Okay. One of our listeners is curious to know what your plan is for drilling over the course of the next year or so, and just kind of how much it costs per meter to drill at both projects.
Yeah, it costs us about $200 a meter at the Goldboro project. That includes everything, including logging, cutting, sampling, assay results, and drilling, which is quite cheap in the overall scheme of things anywhere in the world. I think it's about 250 at Goliath. So both places, because they're easy to get to, the MOB and DMOB isn't expensive, and we've been working with the same drilling companies for years. We're able to, understand any additional costs, et cetera, and keep it down to a minimum. We plan on doing to continue to drill regional targets, to infill the western extension, and to do a 40,000 meter RC drilling program within the area of the two open pits to replicate the first few benches of the mine life, to understand the quantity and quality of the resource at a tight 12 by 12 meter spacing. And we plan to do that starting early next year, that RC program at Goldboro.
Okay. One of our listeners is curious to get recapped on the timeline for the build out at Goldboro. And I know you touched on this, that you expect to have the updated feasibility by mid-year next year. Can you just move us a little bit further through that timeline?
Yeah, so we plan to make a final investment decision based on that feasibility study, and that as a condition precedent to the project finance. at which time we can basically be shovels in the ground mid-year. It's then a 2-year build, 22 months to 24 months to build it. So actual gold production will start mid 2028 and to full capacity by 2029.
And we have a question here about recruiting, what the process is that you're going to go through for recruiting, and perhaps how they can get in contact with the company.
Yeah, so we're going to have a separate website for recruiting. We'll use all the recruiting techniques that we can to get the appropriate people. They can reach out to us right here, as you can see on screen. All inquiries IR@NexGold, or through a new website, which we'll be putting details out at some point in the near future for contact and for contracts and employment. You go on our website for employment opportunities as well. But I think one of the things that's really important to note is that if I'm in the Halifax airport on a Monday morning, there's a lot of people leaving, and they're going to the oil sands or they're going to northwestern Ontario. I see a lot of Red Lake bags, stuff like that. There's people leaving that would rather be mining at home. So hopefully there's a contingent of people. The biggest export of Nova Scotia is people. And, this opportunity is going to create the opportunity for people to come back home.
All right. Chris is interested in knowing or getting you to comment on the fact that if Goldboro is going to be a multi-generational project, will that impact the company's strategy moving forward?
No, it will not, because our strategy is to become a mid-tier producer, building a pipeline of projects and then expanding on those projects. Goldboro doesn't change. If we increase the throughput and we start the underground, our estimates is this could be a 200,000 ounce a year producer at some point. So it blends into the strategy of becoming that 400,000 to 600,000 ounce producer over time with other projects.
And I know, Kevin, earlier you had mentioned that because of the phased development plan, you'll have a little bit more time to work on optimizing the Goliath project. But we've got one listener that is interested in knowing when you might be thinking about having the feasibility completed for Goliath.
Yeah, we don't have an estimate on that right now because we're currently doing our in-house studies on the best, looking at the project as a whole. In other words, Goliath, Goldlund, and Miller, and any new additional targets that we're drilling, how they can all work together, because there's a trucking distance of about 35 kilometers between the two pits. And, we really need to look at where that processing facility should go. And, we need to do those trade-off studies now that we have time to understand what's best for the project. So we'll be doing those studies for the next several months before we choose how we direct to finalize the feasibility study.
Kevin, listen, I really appreciate your ability to handle the shotgun approach to all of the questions. And my observation is, just based on the number of questions and the interest that we've received from our listeners today, that everybody, there are a lot of people who are following your story with interest and very keen on seeing you move forward. I think you've had a very, very busy year. You're going to have another busy year next year. We want to congratulate you on the success of the projects to this point. And I think we had one more just come in while I was talking, but we'll see what.
While you're looking that up, I just we wouldn't be able to be where we're at without the support of shareholders and landowners and stakeholders in the area.
Yeah, basically, it's just another comment that saying that they're very excited about the future of NexGold and the work that you're doing. It's a great presentation, Kevin. We really want to thank you for your time this afternoon. You've done a great job to inform all of our listeners. I think the presentation will be available on our website for a recap if anyone has missed it or wants to go back to it.
Well, thanks very much, Ron, and thanks everybody for listening.